Mark, how are you feeling about China?
Still extremely bullish. I find some of the perspectives today quite bizarre from investors. I thought Rebecca outlined it perfectly. Look, we are never going to get the big stimulus from MDRC. It's not their role. I know we had very ramped up expectations. But you know what? After today's disastrous collapse in Chinese stocks, the CSI 300 is up 33% over the past month. The Hang Seng Index is up 25% over the next month. If that's a really disappointing monthly performance, give me more disappointing performances. The fact is, just because we didn't get an extra, another bazooka of stimulus on the fiscal side today, just because we got only incremental steps, just because we only got thin details on the guidelines of implementing the fiscal side, it doesn't negate we got a whole suite of packages before the break. That was drove with this momentum. Sure, we got excess speculation over the holidays. Sure, things got carried away. We were talking about the moves last week being bonkers on the top side. The fact is, we've still got across every single Greater China market, 25% is the 1 month return or more than that. That is the minimum expected 1 month return or what we had. And that is wonderful performance and it's justified. And I expect that overall, it's not going to be straight line for me. We're not going to get that again. But to think that this has suddenly peaked or topped out just seems bizarre to me.
Yeah. What kind of picture, Mark, are you building of the fiscal stimulus and how important that's going to be? Because it seems as if it was very easy to draw lines between the initial announcements and stocks going higher. But what it means for the global economy, a little harder to pass from some of the commentary that we received over the past couple of weeks.
I think that's right. I think that, you know, some of the numbers being talked about in the fiscal side just seem like crazy. And, it would be wonderful for the global economy and for assets they do that. But then they're just going to stimulate a whole other massive bubble again. And I think that would be slightly crazy. I expect, they made very clear, they're going to continue to pursue their economic goals. I think they're maybe going to be more steady on the fiscal side, less dramatic as they were across all the market measures last week. But overall, they're going to provide support. What does that mean for the global economy? Remember, the global economy is doing well. Growth is good. US growth is good. Most of the world is growing absolutely fine. Global growth is at 3% this year. It doesn't need extra stimulus. So are they going to provide much more? No. But does it need it? No.
I hear you being extremely bullish, Mark, on China. But look, if there is less China stimulus, if there is less global capital into China, if it is good for the dollar generally, that it's down a touch now, how bad is that for the euro?
But I don't think there is going to be less capital flowing to China. The world is still massively underweight China. I still think there's going to be a reorientation on that. It's just not going to work at the pace of the last month. It's going to be gains of a couple of percent, like normal bullish market gains. Normal bull markets might mean 1% a month or so, not multiple percent a day. So I don't think that the story of capital going away from China is valid. I think capital will still flow to China. I think the dollar overall will probably be soft into year end, but in volatile environments, not a straight line.